Well, it's surprising that it's taken this long for the Fed to continue its rate cutting program, but it's an encouraging sign because the second year of rate cuts tend to be encouraging for stock prices. Well, if history repeats itself, and there's no guarantee it will, we will find that all sizes, all styles, and almost all sectors will be higher a year from now, as well as 84% of the industries that had been around for at least three rate easing cycles. My reaction for the 0.25% cut is no surprise. It was highly anticipated in the marketplace, that we will likely get additional cuts in October and at the December FOMC meetings. It is the first cut of 2025, but it still indicates positive potential for the stock market 12 months from now. I think probably the most important thing that was stated by Fed Chair Powell today is that the Fed will continue to be data dependent, will continue to be independent, and will not be pressured by any outside sources. So even though there are three new members that are aligned with the White House, that the policy activities are still going to be based upon the data coming about the economy. He said that it was an unusual situation because we have inflation actually ticking higher since the last meeting, but the jobs picture being a bit softer. This is unusual. That usually inflation goes up as employment rises and economic output increases, but that's not the case this time, which makes it challenging. You have to attack one or the other. And our belief is that they will be focusing on the jobs picture because jobs are what the consumer has in order to earn money to spend that money. And since consumption represents 68% of GDP growth, the focus will be on jobs. It is a risk management cut, but at the same time, because the Fed is likely to be cutting rates again in October and December, it's an effort to put a floor underneath a cooling job market and thereby reduce the risk of recession. Our economists heading into the meeting felt that we would have only two in 2025, in September and again in December, and then two more in the first half of 2026. Now it seems that the Fed is implying that they will be accelerating a cut so that we'll have a total of three September through December of this year, and only one in the first half of 2026. So the data will be the final arbiter of how many cuts we end up with.